So let's have an example on cash book. So the example says Mr. X started a business in the month of June 2019. X invested a capital of $200,000 in which the cash contribution is 100,000 and the rest of the money is deposited in the bank. So cash contribution is 100,000, meaning the bank contribution is the remaining balance, which is also 100,000. Then on June 19th, the following transactions took place in the business, and they want us to prepare the necessary double column cash book using the data given below. So we are going to prepare a double column cash book. So first thing we do is draw. So this is how we are going to do it. Mr. X's, you first start with the heading, Mr. X's double column cash book for the month of June 2019. Then the figures are in dollars. Yeah, so this is the double column. We have cash and bank on both sides. So let's continue with the question. So on 1st June, there was an initial capital contribution of cash 100 and then bank 100. That is the initial capital. So we are going to use that as our opening balance. So we shall write it as, here it's 1st June, then our opening balance. It is written as balance brought down. So cash, it is 100, then bank is also 100,000, like that. Then the second transaction says paid for advertisement of 500 by check. So they paid for advertisement by check. Advertisement is a payment. So we are going to credit it. It was paid by check, so we shall put it in the bank. So we come here and write the date is 2nd June. 2nd June, advertisement 500, like that. Then another transaction, raw materials purchased from Mr. A over 100,000 by paying cash. So raw materials purchased, that is a payment. It was purchased by cash. So cash is going out. So 4th, we shall credit it. As we said, this side is for payments, this side is for receipts. So raw materials amount 100,000. It was paid by cash, so we will put it under the cash column, like that. Then another transaction is purchased stationery of cash 550. Stationery using cash. So it is a payment. We put it this side. What's the date? Still 4th. Stationery by cash 550. So we put it under the cash column. Another part, on 7th June, raw materials purchased from Mr. B of 20,000 on credit. So if something is purchased on credit, cash is not coming in and cash is not going out. So we do not record it in the cash book since it's not bringing in any money and it's not taking out any money. So we do not record that in the cash book. Then on 9th June, goods sold to customer of 15,000 by cash. So sales we made and we are getting money. So we record it on the debit side on name, sales, under cash 15,000. Like that. Then another transaction is on 10th June, paid 200 for office expenses in cash. So they paid for office expenses, it's a payment, and it was paid by cash. So we come here, what's the date? 10th. So 10th, office expenses by cash 200. Then another transaction is on 13th, sold on credit. Sales were made on credit of 11,000 to Mr. C. So it was sold on credit, so no money was being received here. So we do not record that. As long as something isn't bringing in money, you do not record it in the cash book. As long as it's not taking out money, you do not record it in the cash book. So anything done on credit isn't taking out any money. And then other things can be like bad debts. Yeah, bad debt is when someone has refused to pay you. It's not bringing in money, it's not taking out money. So you do not record it in the cash book. Okay, so we ignore that. Then another transaction is on 15th June, received a check worth 11,000 for goods sold on credit. So here we are receiving money for goods sold on credit, so we shall record that. Received a check worth 11,000 for goods sold on credit to Mr. C. So we can just record it as receivables. Okay, you can write the name of the person from Mr. C. What's the date? 15th. 15th. Then the amount 11,000. It was a check, so we put it on the bank. 11,000. Then another transaction is on 18th, raw materials purchased of 10,000 through check. So that was a purchase. Purchases are payments. So on 18th, purchases through check. So it was through the bank. 18,000. Is it 18? Sorry, it's 10. 10,000. Yeah. Then another transaction is on 21st. We drew money from the bank, 15,000 for business. Yeah. So in this case, we are going to bring in something that we call a contra entry. Your contra entry comes in when you record something on both sides, on the debit and then you also credit it. So they got money from the bank for business. So the bank is losing, but the business is gaining cash. So we shall. So on the debit side, we are going to debit cash because the business is gaining cash. And then on the credit side, we are going to credit bank because bank is losing. They got money from the bank for business use. You get that? So we debit cash, credit bank. In case they told us deposited money in the bank. So deposited money in the bank, meaning the bank is gaining. So we debit the bank and credit cash. So in this case, they got money from the bank. So we shall come here What's the date? 21st. So 21st, we are going to debit cash with the same amount. What was the amount? 15,000. So 15,000. So under description, you do not write cash again. So you write bank. You get, if you put the figure under cash, you write bank. So on this side, we shall put the same figure. We write 21st. Then we put the amount under bank, which is 15,000. And then under description, we put cash. That is what we call a contra entry. And here, where there is folio, you put the C in those things. So C, like that, to show that it's a contra entry. Yeah. Then another transaction is a sold goods on credit worth 5,000. So these goods were sold on credit, they are not bringing in any money, so you ignore. Then on 30th June, paid rent by check, 7,500. So paid rent, it is an expense. 30 rent by check, meaning it was paid through the bank, 7,500. Like that. Then the last is a paid salaries to staff of 17,000 in cash. Salary is a payment. So 31st, salaries, it was by cash. So under cash, 17,000. Yeah. So we are done with the cash book. The next thing we are going to do is to balance it off. So we are going to start with the cash column. We are going to start with the cash column. We get this 100,000 plus 15,000, that is 150. Then plus 15, so it's 130,000. Then this side, you first find out which side is greater. 100 plus 550 plus 200, that is 100, 750, then plus 17,000, 100. Let me bring my calculator. So the total for this side is 117,750. So this side it is 130, meaning this side is greater than this side. So what we're going to do, we put the 130, the greater amount, on both sides, 130. Then even here, 130. Like that. Then we get this minus the total of this side, which is which is 12,250. Yeah, so 12,250, it will become the balance brought down. The balance carried down, the closing balance, and it is always put on the smaller side. So this side was smaller, so balance carried down, which is 12,250, like that. Then we come down here and we write balance brought down. The closing balance will become the opening balance. Balance brought down, it will be 12,250, like that. Then we balance off the bank column. We see which one is greater. 100 plus 11,000, 111,000. Then this side, 10,000 plus 15, that's 25. plus plus 75, 25 plus 75. Let me add. My head doesn't work that fast. So 10,000 plus 15,000 plus 7,500 plus 500. It is 33,000. 33,000, and this side is 111,000. So this side is greater than the other side. So we put a greater amount on both sides. 111,000, then 111,000. Sorry. Yeah, 111,000. Then we get this minus the total of that side, which was 33,000. Minus 33,000. So the difference is 78,000. So balance carried down will be 78,000. And it will be the balance rolled down here, 78,000. Like that. So that is the cash book. Yeah, thanks for watching. Do not forget to subscribe, like, comment, share with your friends. Let's catch up in my next video.